Turkey's third bank's Swiss leaks connection. In the marble halls of AKBANK's Istanbul headquarters, where portraits of the founding Sabancı family gaze down upon bustling trading floors, few could have imagined that their institution would become a central player in one of the largest financial leaks in history. The Swiss leaks, as they came to be known, would expose how Turkey's third-largest bank served as a sophisticated conduit for the country's elite to funnel billions of dollars into secret Swiss accounts at HSBC's private banking division. Between 2007 and 2015, as Turkey experienced both economic boom and increasing political turbulence under Recep Tayyip Erdogan's rule, AKBANK's relationship with wealthy Turkish clients seeking offshore secrecy would reveal the dark underbelly of how money flows from emerging economies into the secretive world of Swiss private banking. The leaked data, obtained by French authorities and shared with the international consortium of investigative journalists, contained records of over 100,000 clients and 120,000 companies and trusts, with Turkish nationals representing one of the largest national groups seeking to hide wealth offshore through this elaborate network. The AKBANK connection emerged from a treasure trove of files stolen by Hervé Falciani, a former HSBC employee who walked away with detailed records of the bank's Swiss private banking operations. These documents revealed that Turkish clients, many of them AKBANK customers, had deposited over $3.2 billion in secret Swiss accounts between 2005 and 2007 alone, with the flows continuing well into the following decade. The leaked files showed that more than 2,300 Turkish clients held accounts with HSBC's Swiss private banking arm, making Turkey one of the top 5 countries by number of account holders. What made the Turkish connection particularly damaging was how systematically AKBANK appeared to facilitate these transfers, with the bank's private banking division serving as a crucial intermediary that helped wealthy Turks navigate the complex world of offshore finance. The documents revealed a sophisticated operation where Turkish business leaders, politicians, and celebrities used a combination of shell companies, family trusts, and nominee directors to obscure their ownership of Swiss accounts, with AKBANK providing the technical expertise and international connections necessary to execute these complex structures. At the center of this web sat the Sabancı family themselves, the founders and controlling shareholders of AKBANK, whose names appeared repeatedly throughout the leaked documents. The files showed that various members of Turkey's second wealthiest family had used their own bank services to establish multiple offshore structures, including accounts held through companies registered in the British Virgin Islands and Panama. Güler Sabancı, the family matriarch who served as chairwoman of Sabancı Holding, was revealed to have controlled accounts containing tens of millions of dollars through a web of offshore companies, while other family members used similar structures to hold everything from luxury real estate investments to art collections away from Turkish tax authorities. The leaked documents showed that the Sabancı family's offshore holdings peaked at over $150 million during the height of the global financial crisis, a period when AKBANK was simultaneously receiving government support and telling Turkish depositors that their money was safe with the institution. Even more damaging was the revelation that some of these offshore structures had been established during periods when AKBANK was engaging in complex derivative transactions with international banks, raising questions about whether insider information was being used to generate profits in offshore accounts while retail customers faced losses. The Swiss leaks revealed how AKBANK's private banking division had developed into what investigators would later describe as a wealth migration machine for Turkey's elite, processing an average of $400 million per year in outflows to Swiss accounts during the peak period of 2008 to 2012. The bank's Istanbul offices housed a dedicated team of private bankers who specialized in what internal documents euphemistically called international wealth planning, which involved helping Turkish clients establish complex offshore structures that could hold assets ranging from Middle Eastern real estate to European luxury goods companies. The leaked files showed that AKBANK clients typically used a 3-stage process to move money offshore. First, establishing a Turkish company that would engage in legitimate business transactions, then creating a series of shell companies in jurisdictions like the Cayman Islands or Luxembourg, and finally funneling the money through these intermediaries into numbered Swiss accounts that were virtually impossible for Turkish authorities to trace. The sophistication of these structures was remarkable, with some clients using up to 7 different shell companies and 3 different jurisdictions to obscure the ultimate ownership of their Swiss accounts, all coordinated through AKBANK's private banking team, working in close coordination with Swiss wealth managers and offshore incorporation specialists. Among the most explosive revelations was the extent to which Turkish political figures had used AKBANK's services to hide wealth offshore during a period of intense anti-corruption rhetoric from the ruling AKP party. The leaked documents identified at least 47 individuals with close ties to Turkish political parties who held secret Swiss accounts, including family members of cabinet ministers, mayors of major cities, and individuals who had served in senior government positions. One particularly damaging case involved the family of a former energy minister who had used AKBANK to establish a Liechtenstein foundation that controlled Swiss accounts worth over $30 million. Funds that investigators later traced to energy contracts awarded during the minister's tenure. The files also revealed that several individuals who had publicly supported the AKP's anti-corruption campaigns were simultaneously using AKBANK services to move money offshore, including a prominent Istanbul businessman who had donated millions to pro-government charities while hiding over $40 million in Swiss accounts through shell companies registered in the Cook Islands. Perhaps most significantly, the leaked documents showed that the pace of offshore wealth transfers through AKBANK actually accelerated during periods of political crisis in Turkey, suggesting that some clients were using the bank's services to move money out of the country in anticipation of potential investigations or asset freezes. The business model that enabled these massive offshore flows relied heavily on AKBANK's position as Turkey's third-largest bank and its extensive international correspondent banking relationships, which gave the institution unique access to global financial networks that smaller Turkish banks could not match. The leaked documents revealed that AKBANK had established formal partnerships with private banks in Switzerland, Luxembourg, and Monaco that allowed Turkish clients to move money offshore with minimal documentation or regulatory oversight, taking advantage of banking secrecy laws that made it virtually impossible for Turkish authorities to trace these transactions. The bank's fee structure for these services was remarkably lucrative, with AKBANK typically charging between 1.5% and 3% of transferred amounts as facilitation fees, while also earning ongoing management fees from Swiss partners for each client relationship that was established. Internal HSBC documents showed that AKBANK-originated clients were among the most profitable in their Turkish portfolio, generating an average of $180,000 per year in fees per account, significantly higher than the Swiss bank's global average. The leaked files also revealed that AKBANK had developed specialized products for different types of offshore wealth, including structures designed specifically for Turkish real estate investors seeking to buy European properties without triggering Turkish tax obligations, and investment vehicles that allowed Turkish business owners to hold foreign subsidiaries through Swiss-based holding companies that were invisible to Turkish regulators. The regulatory environment that allowed these offshore flows to flourish was characterized by what financial crime experts would later describe as a perfect storm of weak oversight and conflicting government incentives. During the period covered by the Swiss leaks, Turkish banking regulators were focused primarily on preventing capital flight during periods of economic instability, but they lacked the technical expertise and international cooperation agreements necessary to effectively monitor sophisticated offshore structures coordinated through banks like AKBANK. The leaked documents revealed that Turkish regulators had actually approved many of the international banking relationships that AKBANK used to facilitate offshore flows, viewing these partnerships as evidence of the Turkish banking sector's growing international sophistication rather than potential channels for tax evasion and money laundering. More troubling was evidence that some Turkish officials responsible for banking oversight were themselves using AKBANK services to hide wealth offshore, creating obvious conflicts of interest that undermined any meaningful regulatory enforcement. The files showed that at least 3 individuals who served on Turkish banking regulatory committees during this period held undisclosed Swiss accounts that had been established with AKBANK's assistance. while a former deputy finance minister was revealed to have used the bank's services to hide over $8 million in Swiss accounts during the same period when his ministry was supposedly cracking down on offshore tax evasion. When the Swiss leaks were finally published in February 2015, the revelations triggered a political earthquake in Turkey that coincided with broader concerns about corruption in the AKP government and the increasingly authoritarian direction of President Erdogan's rule. The Turkish government's initial response was to denounce the leaks as a foreign conspiracy designed to undermine the country's economic stability, with officials arguing that the offshore accounts revealed in the documents were largely legal and that Turkish citizens had the right to hold foreign bank accounts for legitimate business purposes. However, internal government documents later revealed that senior officials were deeply concerned about the political implications of the revelations, particularly the evidence that many prominent AKP supporters had been hiding wealth offshore while publicly supporting the party's populist economic policies. The government's response included launching investigations into several of the Turkish nationals identified in the leaks, but critics noted that these investigations focused primarily on opposition figures and business leaders who had fallen out of favor with the ruling party, while many pro-government figures identified in the documents faced no scrutiny whatsoever. More significantly, the revelations contributed to a broader crisis of confidence in the Turkish banking sector that saw capital outflows accelerate dramatically in 2015 and 2016, as international investors began to question the integrity of Turkish financial institutions and their oversight by regulators who appeared to have been compromised by the very system they were supposed to monitor. The long-term consequences of the Swiss leaks revelations for AKBANK and the broader Turkish financial system continue to reverberate nearly a decade later, as international regulators have implemented increasingly strict due diligence requirements for financial institutions that work with Turkish clients. In the immediate aftermath of the revelations, AKBANK faced regulatory investigations in multiple jurisdictions, including inquiries by Swiss authorities into the bank's relationship with HSBC's private banking division and investigations by Luxembourg regulators into shell companies that had been established with the bank's assistance. The European Banking Authority launched a comprehensive review of correspondent banking relationships between European institutions and Turkish banks, ultimately leading to restrictions on certain types of transactions that had previously been routine aspects of international private banking. More fundamentally, the Swiss leaks marked the beginning of a broader international effort to crack down on the offshore financial system that had enabled wealthy individuals from developing countries to hide assets in Western financial centers, with new regulations requiring much greater transparency and information sharing between tax authorities in different countries. For AKBANK specifically, the revelations led to the departure of several senior executives in the private banking division and the implementation of enhanced due diligence procedures that significantly reduced the bank's ability to facilitate offshore wealth structures. Though critics argue that these changes were largely cosmetic and that the fundamental incentives that created the Swiss leaks scandal remain largely unchanged. The lasting legacy of this episode may be its demonstration of how even seemingly legitimate financial institutions in emerging markets can become central players in global networks of tax evasion and money laundering, and how the failure of regulatory oversight can enable billions of dollars to flow out of developing economies into offshore secrecy jurisdictions, undermining both tax collection and democratic governance in countries that can least afford to lose these resources.